A lot of people are asking themselves, now that Bitcoin is doing so well, where is all of this money coming from? What is driving this new hype that we see in Bitcoin? What is driving the price up? And many have different theories. Many people have different theories. And I'm going to go through 3 of those theories, what I think the Bitcoin markets have been pushing so incredibly high over the past months here. And it's really an exciting development. And I hope that many of you are happy to see once again that Bitcoin and crypto is doing very well. But there are a lot of concerns as well for Bitcoin, that the underlying reasons that Bitcoin is pumping is not because of genuine demand for Bitcoin. Instead, it is because of manipulation. And that might be the case as well. And I'll share my thoughts on that in a second. First of all, I want to remind you to go to academy.ivanontech.com if you want to enroll in our academy. If you want to start a career in blockchain or just generally learn how cryptocurrencies work, learn how Bitcoin works, learn how to program smart contracts, then our academy is for you. And I have a special deal for you below. If you want to join, you can get 50% off your first month in the Ivan on Tech Academy where I teach. So make sure to click the link below and join us right now before that special deal expires. Now I'm going to share with you my 3 reasons why I think the Bitcoin markets have been doing very well. And the first one that I want to talk about is tied to Tether. And this is, in the crypto world, a sensitive subject. What is going on with Tether? Because if you look at the graphs, you will see that the printing of new tethers is very well correlated. If this is the Bitcoin chart, the printing of Tether is very well correlated with the price of Bitcoin. Now, that does not mean that is not proof of that Tether is what has been, or that is not proof that Tether is manipulating the market. Because if Tether was a fully backed stablecoin that was completely transparent and everything is well, then this would be the normal behavior, right? Because if people actually use this to purchase Bitcoin, it will be completely normal that they correlate like that. The question that you'll need to prove if you want to prove that Tether has been manipulating the market is to prove the causality between these two, that it is that Tether has been illegitimately printing fake money and buying up the Bitcoin market. Because then you would of course see the same correlation, but the causality of that would be the causation, maybe you say, I don't know, that would be different. Even though I consider Tether and Bitfinex to be doing shady business, and I have been doing videos about that many times, and I've been going through the New York Attorney General's report and so on, and it does not look well. It doesn't look like it's a well-run company. It looks like they are doing a lot of shady things, and I wouldn't have my crypto with Bitfinex nor Tether, but it's up to you. But one issue that I have with the idea that Tether and Bitfinex is manipulating the market is that the idea is, right, that first of all, Tether is a crappy stablecoin. Everyone knows it's not backed by anything, and therefore no one would want Tether. That's premise number 1. Premise number 2 is that Tether is printing fake money. They're printing Tethers, and they're buying up Bitcoin. So they're buying BTC. The problem with that is that if they're buying Bitcoin with Tether, that means someone is selling their Bitcoin for Tether, right? That means someone needs to be selling Bitcoin, and they need to sell it for Tether. So who is out there selling Bitcoin for Tether? I haven't heard anyone that, are selling their Bitcoin in this market. Everyone is holding on to their Bitcoin. And especially if Tether is such a crappy currency, if Tether is known by everyone to be a bad stablecoin, then why would someone sell their Bitcoin for Tether instead of selling it for any other stablecoin or fiat out there? Why would anyone do that? So that is one flaw in the logic of the manipulation argument. But I do think that Tether has something to do with this higher price that we've seen in crypto. Because I don't know what they're doing. I don't know everything about their business, but I do know that they have been doing shady things in the past, and there is probably something behind this very well correlated price to Tether printing line. Now, with that being said, we're going to move on to the second reason that I think the Bitcoin market and the crypto market has been pumping. The second reason is because of the short squeeze. I'll just write like that, short squeeze. And what we've been seeing in crypto over the past year or so, or half a year, is probably one of the world's largest short squeezes. I really think so. I think we've seen the mother of all short squeezes. And if you're not familiar with the short squeeze is, that is basically if you have once again, a chart of the price of Bitcoin, and I can't draw this very well, but Bitcoin has been going down for a long time. It's been at the bottom, and now we have been starting to break out here. And when a lot of people are shorting Bitcoin, let's say people are shorting here, they're shorting here. Shorting means that you're lending Bitcoin from someone, you're selling them on the market, and you're buying them back later. So when you are shorting Bitcoin, that means that you have loaned Bitcoin from someone, you have sold them on the market, and you're waiting to buy them back at a lower price because you need to give them back to the person in which you loaned them from. The problem is that if you have shorted at these levels right here, and Bitcoin is starting all of a sudden to turn around here, that means that this guy here would be behind on his or her position. And somewhere along these lines, this investor has a stop loss, meaning that at some point when Bitcoin is going up here, that investor needs to buy back the Bitcoin that he or she sold and give it back to the person in which he or she lended it from. And as Bitcoin climbs, more and more short investors, short traders, needs to buy back. They need to buy Bitcoin in order to give it back to where they loaned it from. And this, of course, fuels the buy pressure so that the price is rising even more. More short traders needs to buy back their Bitcoin because they are hitting their stop losses. They are behind on their investment, and that triggers further buying pressure. Price is rising even more, and eventually everyone is short squeezed. That is what a short squeeze is, and it is prevalent in any financial market where you can have a lot of short investors, and it's all natural. But the problem is in crypto, I think that so many people has been praying for Bitcoin to go to zero, that many people have been shorting it without really knowing what they're doing, or they're just out of luck. The point is that with such a volatile asset as Bitcoin that goes up and down a lot, when we're late or early in a market cycle and we have a lot of people shorting it, these short squeezes will become incredibly powerful, incredibly powerful and dangerous for investors. It's really dangerous if you're short to see those short squeezes. But of course, with the short squeeze, it could also turn around quite quickly when these every short investor out there has closed their position and liquidated their position. If you want to see this in action, there are a lot of Twitter accounts that, what are they called? Something wrecked. You can follow them on Twitter where they automatically post when people get wrecked on liquidated on BitMEX. So they get liquidated on their short positions, that the Twitter bot tweets out that they have been liquidated. And you can see people being liquidated with hundreds of millions of dollars worth of Bitcoin. It is insane. So that is quite fun to follow. If you want to do that, I can provide a link if I remember to do so. But with that being said, I think short squeeze had something to do with this amazing rally that we've seen in crypto. And now, with that said, I'm going to move on to the third reason. The third reason that I want to talk about is institutions. I mean, I know that people have been talking about institutions, for as long as Bitcoin has been around. And it's a bit, and it's getting a bit old. So I don't want to talk about this too much, but we have seen, even though I believe that this is not the only reason why Bitcoin has been going up, and it doesn't have to be the only reason for Bitcoin going up in the future. But institutions, and especially the sentiment that comes from institutions getting closer and closer to Bitcoin, is important. We have seen companies like Fidelity, and we also have seen now the CME futures gaining steam, a lot of people getting into the CME futures, and we've also seen, I don't remember from whom, but these crypto settled crypto settled futures. And that is also a large step for the futures market in crypto to actually move to real futures, if you want to call it that, not only cash settled. Crypto futures, where they're actually settled in crypto, is very important for the crypto market. So it's not that these institutions necessarily is driving the price by them buying a ton of Bitcoin. That is part of it. But another part of it is also retail reacting to the institutions moving in. So the institutions contribute in two ways, both by buying Bitcoin themselves and bringing in new Bitcoin investors from other people, and also maybe a third way of inspiring previous retail investors to buy more, because it looks like all of a sudden Bitcoin and crypto is getting more legitimacy. Let's also talk quickly about the concerns that people have with the retail interest in Bitcoin, because a lot of people have been posting the graph from Google Trends where the interest in Google searches for the term Bitcoin and Coinbase and Kraken and all of these exchanges is very, very low in comparison to where we were back when we were at 20K. We are not even close according to that graph. The problem with that graph is that you're comparing retail search pressure at different times in the market cycle. I will have a video tomorrow about market cycles, which is very, very interesting. You should stay tuned for that. But then you will realize that the retail investors, and at least the large amount of them, will always come in at the top. I mean, they will always come in at the end of the market cycle. And that means that they came in at 20K back in December 2017. Then the search really spiked for Bitcoin. But we're not there. We're not at the top yet. At least I don't think so. No financial advice. But the point is that the retail investors will come in, at least the search will come in when we're at the top of this market cycle, which is not right now. I don't think very few people believe that we are at the top right now. So the retail spike in searches will come later on in the market cycle. People are still just thinking of Bitcoin as something that went from 20K to 3K. That is the public perception. So it will take a long time for the searches to actually reach the same levels. They will reach the same levels when we are approaching the next high in the market cycle of Bitcoin. But more about this tomorrow when I'll talk about the market cycle and how that affects Bitcoin, altcoins, risk-taking in general. It's a very interesting video, so make sure to stay tuned for that. If you enjoyed this video, make sure to hit the thumbs up button and get subscribed to the channel, very important. And also, let me know what you think about these Blackboard videos instead of the black hole. All right, thank you so much for watching. I'll see you in the next video.